worldwide economic crisis, and the Federal Reserve sees deepening economic pain this year. The Federal Reserve has sharply downgraded its projections for the country's economic performance this year, predicting the economy will actually shrink and employment will rise even higher. Under the new projections, the unemployment rate will rise to between 8.5 and 8.8% this year, if not even more. The Fed also believes the economy will contract this year between 0.5 and 1.3%. The last time the economy registered a contraction for a full year was in 1991 by 0.2%. If the Fed's new predictions prove correct, it would mark the weakest showing since a 1.9% drop in 1982, when the country had suffered through a severe recession. The bleaker outlook represents a growing toll of the worst housing, credit, and financial crises since the 1930s. All of those negative forces have plunged the nation into a recession, now in its second year. Given the strength of the forces currently weighing on the economy, Fed officials generally expected that the recovery would be unusually gradual and prolonged, at best. According to documents on the Fed's updated economic outlook. Against that backdrop, unemployment, now at 7.6% and rising, the highest in more than 16 years, will keep climbing and stay elevated for quite some time, the Fed has predicted. Fed officials have anticipated that unemployment would remain substantially higher than normal. The Fed forecast calls for the jobless rate to dip to between 8 and 8.3% next year. But then again, that's if all goes well, barring any more catastrophes or crises, something on the order. Still, given all the economy's problems, yes, there are risks that the Fed's forecast could turn out to be too optimistic. And a few Fed officials, none are identified, fear that it could take at least 5 or 6 years for the economy and employment to get back into some kind of sustainable mode. Once again, that's if there's no more catastrophes or economic crises of some kind. But anyway, there's more than this going on here. It's a worldwide economic downturn or crisis. You can't just fix the problems in one country, because it really is a worldwide economy now. All the economies are connected or interconnected. So you have to fix all the world's economies in some kind of way. And that's going to be very difficult. And once again, there's something more going on here. There's something bigger in all this. Industrial production falls in January. Production at factories, mines, and utilities fell 1.8% last month. Big industry production throttled back in January, due partly to auto shutdowns and falling housing construction. Weaker than expected performances that show the country caught in a worsening economic downward spiral or tailspin. The Federal Reserve has reported that production at the nation's factories, mines, and utilities fell 1.8% last month. Many economists expected just a 1.5% decline. This was worse than expected, and it marked marked the third straight month where production was cut back, and even December's performance was even weaker than initially reported, plunging 2.4%. Another report from the Commerce Department said construction of new homes and apartments plunged 16.8% in January from the previous month to a seasonally adjusted annual rate of 466,000 units, a record low. The pair of reports underscored the growing toll wrought by a trio of crises: housing, credit, and financial, that are the worst since the 1930s. Many economists believe the current January-March quarter will be the worst of the recession in terms of lost economic activity. The economy contracted at a pace of 3.8% in the fourth quarter of last year, and is probably shrinking at a pace of 5% or more now, economists say. The economy is expected to remain feeble this year, with unemployment rising. The Fed's report also showed that factory production dropped by 2.5% in January. Shutdowns at plants making autos and related parts figured prominently in that decline. Output at mines fell 1.3% last month. Consumers in the U.S. and overseas retrenching, manufacturers have been clobbered, pushed to the financial edge, especially like Detroit automakers, General Motors Corporation, and Chrysler, who have received billions of dollars in government aid just to keep going. Swift, steep downturn crosses the globe, all around the world. Markets around the world have plunged as evidence mounts that the global economic crisis is worsening. Again, the global economic crisis is worsening, a downward spiral. Japan is suffering its worst downturn in 35 years. The British economy is facing its sharpest decline in almost 30 years. And Germany is slumping at its worst pace in nearly 20 years. Meanwhile, the job market in the United States, at the epicenter of the global downturn, is the worst in decades. And emerging economies are contracting at a pace few had predicted just a few months ago. Even China, whose economy still is growing at a 6.8% annual pace, is starting to slip and is grappling with huge numbers of the unemployed, raising fears of unrest. The sharpness of the global slowdown has alarmed economists who see no obvious engine for recovery. Most Western developed economies are going to see the deepest downturn they've seen in a number of decades. In some cases, possibly since the Second World War, or even the Great Depression, or if ever, said the chief European economist at Capital Economics. If you go back 6 months or so, there was a hope that some parts of the world would escape the downturn from the U.S. economy. But now that hope has faded. We're seeing a downturn in virtually every area of the world. Yes, and all these things are connected or interconnected to everything else that's going on around the world, every day, day by day. And all these are more signs of the end times transition days. Everything that can change must change rapidly. God is showing us what is wrong with the economic systems, the political systems. Climate change is real. these, once again, are more signs happening all around the world.